Hello, and welcome to TMUS Investment. This analysis is for T-Mobile US on NASDAQ as of 7th of August 2026 with a share price of $179. The full report is on donartsyen.ca. The US wireless growth leader at about 12.5 times forward earnings, roughly two-thirds of its warranted multiple after approximately 31% derate from its high. So the medium and long calls are both buy. Short term it is a hold. The primary trend is still down, below the 200-day and 50-day averages, with no confirmed technical entry yet. Buy on confirmation, accumulate on weakness. The quality here is genuine, if capped by a heavy balance sheet. T-Mobile runs the best network economics of the big three, built on the deepest mid-band 5G spectrum in the country, from the Sprint merger and the 2025 US cellular deal. A real structural cost edge over Verizon and AT&T. Second quarter revenue rose almost 8% to $22.8 billion, with service revenue up 9%, EBITDA margins near 31%, and return on equity around 18%. That converts into serious cash. The full-year adjusted free cash flow guide was raised to $18.4 to $18.8 billion, funding buybacks that cut the share count from about 1.14 billion to 1.08 billion in a year, plus a dividend just raised 16%. The one clear weakness is leverage, $120 billion of gross debt. On valuation, the leader is priced like a straggler. The stock has derated about 31% from a 52-week high of $261 to $180, even as forward earnings estimates held, pushing the forward multiple to roughly 12.5 times, near the bottom of its own 5-year range. Against a warranted multiple of about 20 times, that clean 13 times reading is a ratio of 0.65, squarely in the attractive band. The growth-adjusted PEG is 0.83, the EV free cash flow yield around 6%, and the dividend yields about 2.35% and rising. At today's price, the market embeds only 3 to 4% long-run earnings growth against a franchise compounding high single digits. The consensus target is $235.50, about 31% above spot, with 81% of a well-covered analyst panel bullish. So why not buy today? The reason is timing, not the business. The primary trend is still down. The stock sits below both the 200-day average near 198 and the 50-day near 182, with the monthly, weekly and daily timeframes all in downtrends. The good news is the knife has stopped falling. After the post-second quarter crash to about 170 and a late June low of 166, the daily RSI has neutralized and price is bouncing, up almost 4% in the last session. But that is a counter-trend rally inside a broken downtrend. Only the fundamental entry path is met. Neither the technical nor the catalyst path is. So the ladder reads half size. The plan is to buy on confirmation, a volume-backed reclaim of the 50-day average, or a tested higher-low bounce off the 170 to 174 base. The risks are real, and they are why the bear case exists. That bear sees the shares fall to about $150, roughly 17% below today. The core threat is subscriber momentum. T-Mobile guided third-quarter postpaid net adds down to around 250,000 and warned of temporarily elevated churn as it modernizes rate plans, the first cracks in years of industry-leading growth. Underneath that, the battleground is shifting to convergence, where T-Mobile is less advantaged. AT&T and Verizon bundle fiber with wireless to lock in households, while cable operators like Comcast and Charter run low-cost mobile plans that pressure the value tier and ARPU. The heavy balance sheet compounds it. $120 billion of debt means a higher-for-longer 10-year yield weighs directly on the valuation and the dividend. If net adds turn negative or churn stays elevated past the third quarter, the growth leader thesis breaks. Now weigh the risk against the reward. The bull case is roughly 42% above today. The base case, the most likely, about 19%, and the bear case, a fall of about 17%. So you are risking about 17 to make 42. So, our call on T-Mobile US on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at donatien.ca. The link to the full report is in the notes below. Have a great day.